टाइम हो गया?
Yeah. Yes.
Good morning, everyone. Thank you for joining in large number. This is first roundup edition for 2020-21. We got a highly encouraging response in 2020, but we also got a feedback. Good morning, everyone. Yeah. So we also got a feedback from some of you that the roundup tends to be a bit longer. So we have relaunched this roundup edition from today, which will be a crisper version. So we'll try to wrap up the session within 30 minutes and then take up the questions. And we'll cover the changes and rulings which are generic and relevant for all of you in general. Will not take up specific industry-based issues. So with this, we start today's roundup, and my colleague Gaurav Narula. So he'll start the session. Over to you, Gaurav.
Yeah, good morning, everyone. Thank you, Puneet. We wish you a happy Lodi and a happy Makar Sankranti. We welcome you to the January edition of our Roundup. Today, we are going to discuss the newly announced road tip scheme under the FTP. We will be discussing the recent changes made in the GST Act and GST rules. We would also be covering important GST rulings which have come up in last 1 month. And at the end, we would be taking up your questions to address. So, starting with this road tape, uh, So starting with this road tape, I think this is one big change which has been made by the government on the eve of 31st December. So they kind of launched this scheme immediately from 1st of January with an immediate effect. The relevant orders were issued, the relevant changes in the ice skate were made, and immediately on 1st of January, as a New Year gift, this scheme was being launched. So just a quick background about the existing incentive scheme and how this scheme is going to impact the other exporter. So we have a foreign trade policy which is applicable from 2015 to 2020 as of now. This FTP was extended till March 2021. Under this FTP, we have two popular schemes. First is the ACIS scheme. This scheme provides incentives to service exporter. As of now, for 18-19, everything has been in order. For the financial year 1920, the claims are available, but the government has not notified the category of services and rate. So there is a big question mark on the eligible services and rate for 1920. Moving a year forward for 2021, what is the fate of this SEIS? Will this continue? If yes, what would be the rate? Will government think of making some retrospective amendment, etc.? Is something which is very unclear. In parallel, we had this MAIS scheme. This was applicable till 31st of December 2020. From 1st of January, this scheme has been replaced by RODTP. In the interim, what government has stated in the calendar year 2021, they have introduced a cap on MEIS benefit in September 2020. They've said that for per IC holder, the overall incentive would be kept at 2 crore rupee. They have also given an overall budget of this MEIS scheme to be 50,000 crore. Now, what has happened because they have made this restriction for the period starting from October to December, and exporter already had factored this incentive in their export order on account of the fact that government made a promise that this scheme will continue. So a lot of big exporter has challenged this capping by the government in the Delhi and Gujarat High Court. They have taken various grounds in this writ petitions, which includes ground of promissory estoppel, that you made a promise, now you are getting a withdrawal from your promise. Legitimate expectation, this is something which was expected now being withdrawn. Third, retrospectively. Most importantly, the change which government wanted to introduce, if not prospective, this has kind of come with a retrospective impact. And lastly, this is discriminative. Government is making a point that it will only impact 2% of the exporter, rest 98% of the exporter will continue to get this incentive. Interestingly, these 2% forms the major chunk of big exporter who are bringing a lot of foreign exchange from India. So to our mind, this is completely discrimination against the Constitution of India. So they have been challenging this MAIS amendments on this ground. Now, one important point which we wanted to make is suppose there is a favorable order tomorrow from the Delhi or Gujarat High Court, then this will not become the law. This order would only be beneficial to the taxpayer who have or to the exporters who have filed this writ petition. Now this window is open. If you are also one of the exporter who has been hardly hit by this retrospective amendment by the government on MEIS scheme, then we would encourage you to file a writ petition in your respective high court. You can take these pointers and also come up with other grounds to file a writ petition before your respective high courts. Moving further, from 1st of January, they have introduced a new scheme, which is road tip. If I just elaborate this, it stands for remission of duty and taxes incurred on export products. The fundamental background of this scheme is that export has to be tax free. So whatever cost that is being embedded in the manufacturing process of export goods, government intend to compensate you for this. To give you an example, if you are availing a services of road transport agency, then this road transport uses diesel as one of the fuel for transportation of goods. Now, this diesel, we know that it attracts excise duty and VAT. So this is a non-creditable tax in the hand of your service provider. So effectively, it increases the price of its services, which gets embedded in your manufacturing cost. Similarly, you may also have a lot of expenses on which credit may not be available, like restricted expenses under Section 17(5), or you may be paying a lot of license fees, other fees to central government or state government, for which credit is not admissible under GST. So all in all, there are incurring of taxes at your level, increase of taxes at service provider level or the supplier level. Whatever is the embedded cost, the purpose of this scheme is to compensate you for this. Now, how this scheme will work, like I said, it targets to give you a reimbursement of all the non-creditable taxes. When we are talking about non-creditable taxes, it applies to you and it also applies to the first leg of your supplier, be it a service provider or a goods provider. This benefit is given as a percentage of FOB value of export goods. This would be similar to SCIS MES. This would be given in the form of scripts in your electronic credit ledger. We would be discussing the process in brief in upcoming slide. Important to note that this incentive is over and above the existing duty drawback which you are claiming on export products. So from 1st of January, if you are eligible, then you will get both duty drawback and you will get this incentive of RODTP as well. This scheme you would be able to use against payment of customs duty on imported goods. Also, these would be a freely transferable script. So in case you do not have any import, you can sell this script to market. This actually effectively becomes a cash to you in your business. Rates of this scheme is yet to be notified. Government initially announced that there would be a phased manner rollout of this scheme. They asked three priority sector to submit the data points of non-creditable taxes. So they notified a form. They asked manufacturers, both small, medium, and large manufacturers, to submit a data computation in which they wanted them to give a scientific data backed by their trial balance and chartered accountant certificate that this is the embedded tax code at their leg and their service provider leg. So based on those computations, government is supposed to bring up these rates. Uh, they demanded data for three sector with the intention that they will roll out this scheme for three sector initially. But what has happened? They have rolled this scheme for all the sectors, and wherever they only have data for three sectors. So what now they have asked is they have asked all the exporter who would be availing this scheme to submit data of this non-creditable taxes in requisite format to them. So based on this data, they will take up the rate finalization exercise and notify. Whatever rate will come, that will be effective from 1st of January on your exports. They have immediately made changes in iSkate. They have asked exporters to make certain notified declarations in their shipping bill, whosoever wants to avail the incentive under this scheme. Now, interestingly, what has happened, they have kind of created this scheme to be mutually exclusive of advance authorization and EPCG license holder. So if you will simply compare today, if you are getting a MEIS benefit, then you can simultaneously claim benefit of advanced license and EPCG. But under this new scheme, they have disallowed this benefit. They have said either you claim this new scheme or you take incentive under advanced license or EPCG. They have also made corresponding amendments at the ICS portal. So if you are filing a shipping bill, it will only permit you to choose advanced license EPCG or it will permit you to choose this RODTP. Since we will discuss that this has been announced via this press releases, etc., they have not notified the formal notification. So our advice to all this sector advanced license EPCG holder is that they should uh, select road tip as a criteria in their shipping bill. They should give a remark that they are also claiming this advanced authorization benefit till the time there is a formal notification permitting or disallowing this benefit. And they should also file a declaration with their customs authority that this is the tax position which they are taking on their exports. Um, Also, two important sectors which are export-oriented unit and SEZ, they have been consciously kept out of this. So they have made a specific declarations for EOU, but they have not said anything on SEZ. But you can get a flavor that intentionally they have kept EOU and likely SEZ to be out of this incentive scheme, which is again completely irrational on their part. Um, they have also given powers to the customs authority to suspend this script, uh, which time will tell how rationally this power can be exercised by them. Moving to the procedure, how you can get this script. Procedure is very simple. You have to make requisite declarations in your shipping bill. This will be generated into EGM, which will go to customs authority for processing. There could be a random check or no check, and based on the processing, there would be a generation of credits in your electronic credit ledger. This credit has to be converted into script in your RODTP credit ledger. Once the script is being generated, you would be permitted to use it against your upcoming imports, or you can sell the script electronically via this portal. So all in all, it is a complete transparent process in generation of scripts with little or minimal human intervention. The only point which needs to be taken care is how the rates are being notified and how the sectors are being impacted out of this script. They also permitted clubbing of multiple shipping bills at one port. Now, let us see what are the key issues as of now in relation to this new scheme. Like we discussed, there is no statutory backing as of now. They have only issued press release and advisory relatable to this new scheme. Second, they sought data only for chapter 86, 88, and 89, which reasonably they got. For all the exporter where the product is classifiable under chapter other than 86, 88, and 89, the window is still open. We would encourage them to file requisite data to the government so that a scientific rate of incentive could be notified. You should look at this exercise in this manner that this rate is going to be a regular income for your export products. We have an experience where rates are generally not being tweaked for a period of 4 to 5 years. So your effort today is going to give a scientific rate which would be valid for at least 4 5 years on your exports. Uh, Time frame government is not has not given any limitation. We can reasonably take a period of 1 month, 1.5 months that they will at least take to notify this rate. So we have this window to submit our data points to them. There are few open questions. A, what will happen to the utilization process of SEIS, MEIS in this transitional period? Ideally, they should have come up with clarification, but pending such clarification, we can safely assume that the existing processes will follow. Uh, Restriction of this benefit is completely irrational. So these sectors and these license holder immediately needs to make representation to the government that it is taking away of their right, which was again given by them in the earlier policy. We have seen same fate in the post-export advance license issue, where they kind of curtailed this right, which was not taken care. The issue went to high courts in different writ petitions, and later government completely made a U-turn and agreed to give this incentive from July. So we have this precedent. So we encourage you to file this representation to avoid unnecessary litigations in terms of rate, and then asking them to take a U-turn on this. Uh, Importantly, since we don't have any rate, so it is very difficult to fix export price as of now, pending this incentive rate. So what we should do on this present script? A, we should immediately assess the immediate tax cost and file this data point with the committee. Second, we should also file representations with the government on following issues. A, to get clarity on the rates, they should come up with this rate immediately so that export prices can be fixed rationally. They should also provide clarification on the issues which we have discussed in preceding slide.
So, thank you, Gaurav. And if you see, there are so many issues relating to exports, like be it MEIS for past, it is not being granted. For September to December, there is a cap which is being challenged. For SEIS 19, 20, 2021, there's no clarity. Road tip scheme has been announced and no rates, no procedure, no legal basis is there. So it seems that the government's promise to exporters community that they want to encourage exports, etc., is a empty formality. With this, we come to the next section on the changes which have recently happened. So as far as cancellation of registration is concerned, the government has laid down additional circumstances like availment of ITC in contravention of Section 16 or corresponding rules, where figures of GSTR 1 and 3B are not matching, where Rule 86B has been violated. Similarly, for suspension of registration, if there are significant differences or anomalies between GSTR 1 and 3B, ITC availed in 3B versus 2A, 2B, and any other analysis which is recommended by GST Council, so the registration can be suspended. Very importantly, and which has been very much talked about, that the suspension of registration can happen even before, even without proper officer giving an opportunity of hearing to the taxpayer. So you'll see that the GST law is becoming much more complicated, and even though the government's intent might be that only cover fraudulent taxpayers, etc., but it is unsaid that these provisions, or I'll say draconian provision, these can be misused against genuine taxpayers as well, even in bona fide disputes. Moving ahead, what other changes have happened? The only welcome change that has happened is that ITC on debit note. Now, the relevant time limit will start from the date of debit note rather than the period to which it relates. Therefore, as far as debit notes are concerned, whatever are issued post 1st January 2021, the credit will be available even if they pertain to the earlier periods. GSTR 99C for 2019-20, the date has been extended to February 28, 2021. Just 2-month extension has been granted. So it means now the government seems to be coming on track for these annual returns, etc. Another very important change, more from a logistic perspective, that validity of e-way bill, it has been reduced. Earlier for one day, 100 kilometer was permitted. Now it is 200 kilometers. So it will necessitate that the goods are transported well within time. Otherwise, the issues relating to cancellation of way bills, etc., will come up. Again, not a welcome step. The offenses and penalties provisions have been significantly enhanced. The person who retains benefit of certain transactions, be it ITC, etc., or on whose instance these transactions are conducted, those can also be penalized, apart from the people who take ITC or who issue invoices in the following situations, where supply has been made without invoice or the invoice is incorrect or false, where invoice or bill of supply is without supply, where ITC has been claimed without actual receipt of the goods, and in cases involving improper availment or distribution of ITC under IST. Again, similar to registration, the point which we want to highlight is that the government's intent may be noble to cover fraudulent cases, but they have made the law so much wide, be it registration or offense penalty provisions, that this is likely to be misused. So taxpayers need to be cautious about that. Coming to the GST returns, so the present system will be that e-invoice details will be auto-populated in GSTR1. Another not so welcome step is that if GSTR 3B is not filed for 2 consecutive tax periods, GSTR1 cannot be blocked. So it will directly impact the recipient and he cannot be able to avail ITC. Again, e-invoice details will be auto-populated in 2A and 2B. The government has provided a facility for communication between taxpayers, suppliers, and vendors on GST portal. As far as 3B is concerned, the liability will be auto-populated, including ITC and RCM transactions. And yes, Rule 36(4) much talked about, wherever the ITC is not getting reflected or not uploaded by the portal, the government has reduced limit from 10% to 5%. Therefore, it will necessitate the need for these reconciliations on a much regular basis. Rule 86B, government has introduced that minimum 1% tax has to be paid in cash. Just a quick glance of Rule 86B, it applies to taxpayers wherever taxable supply exceeds 50 lakhs. These exceptions are very important. So the situations which are not applicable in our view, these are very wide. So many taxpayers will be outside 86B, wherever the taxpayer himself, MD, whole-time director or partner has paid income tax exceeding 1 lakh in last 2 years, which will be satisfied by many taxpayers, or he has received refund of unutilized ITC of more than 1 lakh, or he has discharged output tax liability of 1% in a financial year. And lastly, the government departments, PSU, local authorities, statutory bodies, they will be outside the purview of 86B.
So Puneet, I'll add just one thing. If you look at this whole IT mechanism of GST returns, and you study the corresponding amendments, now wherever there is a mismatch of ITC, or you have availed excess ITC, or you have an inconsistent turnover in GSTR 1 and GSTR 3B, the officer now has got the power to suspend your registration or cancel your registration. Now, suspension and cancellation seems to be a procedural thing, but the real business impact of this suspension and cancellation is that you will not be able to generate your e-invoice and you will not be able to generate your e-way bill, which means effectively your complete supply chain will be impacted if, because of these mismatches, the department chooses to take an action of suspension or cancellation of your registration certificate. So now in this electronic era, this reconciliations and timely reconciliation, I would say, are going to be a very important if you simply wanted to run your procurement and supply chain under GST.
Yeah. So very valid point, Gaurav. So both from a supply chain perspective on the output side, as well as from the recipient perspective, the government is tightening all the things, and even genuine taxpayers are likely to get impacted. Another important point, so this departmental GST audits and why it is relevant is that for 17-18, the last date of filing 99C was 31st January 2020. The government has prescribed time limit of 3 years under Section 73, which ends in January 2023. So any show cause notices, etc., which they have to issue, that has to be issued and concluded by January 23, and 3 months adjudication procedure is prescribed. So if we reduce 3 months from January 23, all the show cause notices need to be issued by October 2022. Being first year of GST, there are likely to be difference of opinions, disputes, etc. So that's why in this year and next year, we'll see significant heat coming up in these departmental audits for them to fulfill limitation. Various state governments have issued guidelines. So the procedure will be that Form ADT1 will be issued where audit officer can sort information. The standard checklist includes financial statements, input output summary, cancelled invoice, credit note, debit note details, transfer details, etc. Audit will be conducted at taxpayers' place of business. Very importantly, the law prescribes that it needs to be completed within 3 months of initiation, and initiation will be considered when taxpayer has provided the documents. So considering first year of GST, way forward, what we suggest is that the taxpayer should be ready with all these documents, information, reconciliations, etc. And it will be good that either internally or through an external professional, they get a pre-audit review done to see everything is in order or not. Now we'll come to a small poll. We are launching a small poll. So the poll is, does GST continues to be good and simple tax as coined by our Prime Minister on June 30th, 2017, or we feel that the GST has lost its essence and it is becoming more complicated than erstwhile taxes. So we request all of you to cast your vote. So the options are yes, no, and not sure. We'll wait for 15 seconds and we request you to put your answers. So does GST continues to be good and simple tax as coined by our Prime Minister on June 30th, 2017? Yes, no, and not sure. So we'll wait for another 5 seconds and then we'll close the poll. So people are still polling in large numbers. So we'll close the poll now and we'll show you the results. So the results are that 82% feel that no, it is not good and simple, or the other term coined for this was Gabbar Singh tax by Congress, and only 12% population feel that it is good and simple. So yes, that is the reality, unfortunate reality. With this, we proceed further. We come to our last section now on the rulings, and we'll cover a few rulings which have come uh, in last month. So the first ruling, and this is very much talked about topic, is service tax on compensation or penalty. There's a recent Delhi tribunal ruling, very important ruling. So the issue was that the taxpayer collected compensation penalty and forfeited earnest money wherever contractual obligations were not met, and service tax authorities are demanding service tax. So the tribunal held that service tax is not applicable, and these were the reasons which were given. Consideration of service must flow from the recipient. It should result in some benefit to service provider, whereas that is not the case. Penal clauses in contract are meant to safeguard commercial interest of the parties. You need to read agreement as a whole to gather what is intended. Compensation or penalty and forfeited earnest money is not consideration for tolerating an act. And basis this, the tribunal held that service tax is not payable. Judgment is equally relevant in GST regime as well, because we have similar clause of tolerating an act. And in our view, this is a correct ruling, and these liquidated damages, in whatever name called you call it, as penalty, forfeiture, notice pay, etc., these should not be subject to tax. The second ruling is ITC on sales promotional goods, another important ruling. So this ruling dealt with two type of goods. One was non-distributable goods, which were given to distributors, etc., for their own use, and distributable goods, which were given to distributors so that they can distribute it further to end customers. So the question was ITC eligibility. For non-distributable goods, the Advanced Ruling Authority rightly held that these goods are capitalized because these will be used over a period of time. These are used for the purpose of business, and hence ITC is available. And they also rightly held that because Section 17(5) provides that if there is a written off loss or destruction, then ITC reversal will apply. As far as distributable goods are concerned, they divided this into two scenarios. If the goods are given to related party, uh, uh, then GST will be payable even if there is no consideration. Once GST is payable, ITC becomes automatically available. If not to not to a related party, ITC will not be available because these qualify as gifts. Third, another draconian provision which department is invoking in many cases is blocking of electronic credit ledger. So in this case of Karnataka High Court, the electronic credit ledger was blocked without giving any reasons. Rule 86A, the High Court held that Rule 86A mandates recording of reasons in writing. And because there were no reasons which were assigned, therefore, order of blockage of credit is not sustainable. They send the matter back to authorities to pass detailed reasoned order. The next ruling is another dispute being faced by many exporters. So the issue was simultaneous claim of output GST refund by advance authorization holders. So an advance authorization holder took both BCD and IGST exemption on imports. When it made the exports, it charged GST and claimed refund. So in this Gujarat High Court ruling, Zaveri and Company, so the earlier Cosmos ruling we discussed in the last last Roundup edition. So in Cosmos ruling, the court held that the amendment brought in is applicable from October 23rd, 2017, whereas the notification was very clear that it is prospective only. It is applicable from October 9, 2018. Effectively, it means that from October 2017 to October 2018, both output GST refund and advance authorization benefit is simultaneously available. Plus, it clearly came out from the government circular also. Fortunately, the court noticed this point, and it has it has stayed the show cause notice as of now. You can also refer to our Nitya legal monologue, which we recorded last month on this issue, which explains this in a greater detail. Provisional attachment of bank account. The taxpayer was making fruit drinks and was discharging 12% GST. The department initiated proceedings and attached the bank account. The Bombay High Court held that provisional attachment cannot be undertaken unless taxpayer has suppressed the transactions to evade tax. In this case, there was no default from the taxpayer in payment of tax, nor there was any intention to evade. The court held that the authorities need to exercise these powers in a judicious manner, and held that the attachment of bank account has to be undone. The last ruling for today is that we see a lot of summons or investigations being happening. So the question is whether a lawyer can be present during these summons or not. So in this case, the DGGI issued summons, and the taxpayer was under fear that the department may resort to some forceful tactics. So based on that, it approached MP High Court. So the High Court allowed the petition and held that advocate can be present during this interrogation, but they held that the advocate can sit a distance so that he's not in an audible range, so that he's not able to hear what interrogation is taking place, but he can see what is happening, so that there's no any physical abuse of taxpayer being taking place. A very welcome ruling and relevant in the present times. With this, we come to end of today's roundup, and we'll be happy to take any questions live. So you can raise your hand and we'll take your questions. Mr. Milind Deshpande, you can ask your question. We have unmuted you. Mr. Milind Deshpande. Mr. Milind, you can unmute yourself and ask the question. Okay, I think there's some issue. If anyone else has any questions, you can raise your hand and we'll be happy to take your questions. So we have one question which was put on the chat box from Mr. Abhay Kumar Pandey with respect to 99C clarification for segregation of inputs, services and capital goods HNYS summary. Request your clarification for its applicability for 1920. Gaurav, will you answer this?
Yeah, so Mr. Pandey, yes, they have granted similar I would say relaxation for the present financial year 1920 as well. So they have issued this notification, I think somewhere around October or November, clarifying this.
Okay. So, Mr. Abhay, this is relaxed for the next year as well. Then we have got few more questions. One from Mr. Vijay Batra. Mr. Vijay, if you are on attending the session, you can ask your question. Okay. Then we have from Mr. Ankur Sharma. So the question is road tip incentive linking with BRC or shipping bill. So, so Mr. Ankur, it will be linked with the shipping bill only, not BRC. Then we have next question from Mr. Anil Gosai. Any registration is required for RODTP? So answer is no. HSN code and rate of tax will be same as MAIS. So sir, as far as export goods is concerned, you need to use same HSN code only, but the government is yet to notify the rates of road tip.
So just adding on this point, government has issued a detailed guideline relating to ice skate and logging into DGFT. So in case you have issues in registration, etc., they have discussed the procedure which needs to be followed in case you wanted to have this incentive. So you can go through that. In principle, registration is not required, but yes, in case you have any challenge in IC activation, deactivation in the old scheme, then there are transition provisions which has been very well discussed in the press release issued by the government on this point.
Mr. Ashok Chaudhary I think you have posted your question. You can ask as well. We are unmuting you, Mr. Ashok Chaudhary. So you can unmute and ask your question.
So, sir, our question is that now government has put the cap of 2 crore for MEIS incentive for the period 1st September 20 to 31st December. Now, we want to know that if there are certain cases where we may have incentive for more than 2 crore, maybe 3 crore or 4 crore. So what is the way forward? Whether we can have this benefit of additional 2 crore or 1 crore in future or not, or it will be a completely loss to the organization, whosoever is having
Right,
scenarios.
right. So Mr. Ashok Chaudhary, the first point is that even 2 crore benefit is not assured. The reason is that government has put a budget of 5,000 crores for the period September to December 2020. So if the number of claims are on higher side, then even this 2 crore will be proportionately reduced. Secondly, as far as this thing is concerned, the only way out is that you should challenge this amendment in the High Court. In our view, because of the multiple reasons of promissory estoppel, legitimate expectation, etc., this amendment is totally incorrect. But yes, many taxpayers have already approached high courts of Delhi and Gujarat, but you need to put your own facts about your pricing, costing, etc., and then you can expect a relief. Unless you do that, it will be lost.
Thank you, sir. One more, sir, a little bit operational question related to GSTR 2B. Recently, we have seen that GSTR 2B is being auto-populated by the government, and in that they are also providing the bill of entry details, and basis on which they are expecting the organizations to avail the credit only for those ITC which are reflected in even for import also. But there are some observations that might be some technical issues, that the 100% bill of entry which we are having in our hand, where we have paid also through IceGate, the 100% is not getting reflected in GSTR 2B. So what's your take on that? Is it whether government can stop the credit if that is not matching with the 95% which are the new rule is being introduced as per Rule 34? So that also
Yeah.
applicable.
Yeah. So, Mr. Ashok, your point is valid. And few months back, even in 2A, they started reflecting these bill of entry details. So many of our clients have received system-generated show cause notices in which the government has blindly compared this is the total credit which you have taken in 3B, and this is what is coming in 2A. So in our view, these notices should not legally sustain, but as a good practice, we'll recommend you to do reconciliation between them. They may be opening, closing, bill of entry cases, etc. So you must maintain a proper reconciliation with both 2A and 2B.
Sir, reconciliation is one thing, and our question is that there are certain bill of entries which are not at all reflected in 2B. So the bill of entry is the government generated document. It's not any SSP is generating the document. But even though this such bill of entries is not getting reflected in the 2A or 2B, then what course of action we should take? Because there is no one is going to listen in import in customs also that why it is not reflecting.
Yeah. So I feel that you cannot change anything with that, but yeah, items like this can become part of the reconciliation, and you'll surely have the copy of bills of entry tomorrow. If someone says that how you have taken credit on that, then it can be justified.
Yes, thank you.
Thank you. Thank you. Mr. Sarwar Khan will unmute you. You can ask your question.
Yeah, good morning, Punitji.
Good morning, Sarwarji.
Yeah, this is an operation question, not directly related to today's topic. This is regarding this IRN, which is now from 1st January, with companies having turnover over 100 crores have to issue IRN now. So on the buyer side, how we can ensure that the turnover of the vendor has crossed 100 crores? Because there is no communication from the GST portal or the e-invoice portal where we can ensure that this such and such vendor has to raise an IRN because their turnover has crossed 100 crores, other than taking a declaration. Because our ITC will not be we cannot avail the ITC if we get an invoice without an IRN. So that's a dilemma.
Right. So Mr. Server, one, there is a facility on GST portal where, based on GST registration, you can inquire whether someone is coming under e-invoicing or not. And secondly, as you rightly mentioned, what we recommend is that you should take declaration from all your vendors and suppliers that if they are covered under e-invoice, then they will be doing all these compliances. Otherwise, they certify that they are not covered, and in future, whenever they do, they will do that compliance. Otherwise, you'll recover ITC, interest penalty, etc. from them. This is the only way, sir.
But from where GSTN portal, from our GSTN portal, how can we see whether our vendor has crossed 100 crores or not? We don't have a that facility to see, no? The other parties.
Can you clarify?
No.
So there is a this database available on GST portal. Maybe you have to look out for a link where they have put up the list of all the suppliers GST invoice who would be covered under this ambit of e-invoicing. Just one caveat: we have seen situations where this data is not complete, so there could be other category of supplier which are technically under e-invoicing net, but their data is not being reflected on the portal. So, like Puneet mentioned, you have to follow both the methods. A, you can first check on the portal about the inclusion of this supplier in this e-invoicing ambit. Second, you should build up a process to take declarations from all your supplier where they are not issuing e-invoice to protect yourself in future departmental inquiry and investigations.
Yeah, I'll just have that link offline. I will talk to you
Sure,
offline.
sure.
Yes.
We have seen it. We have seen it in the e-invoice portal that they are giving a link, but that link is for persons who are generating IRNs. Persons who are not generating IRNs, we don't have a link. And the other point is how to ensure that whether they have raised a IRN on all the invoices. Sometimes due to technical glitch or something, they have some of the invoices the IRN is not generated. So initially it was informed that to the buyer also the invoice will be sent by the portal, the e-invoice portal, which has not been activated as of now. So that's a big problem for us.
Right. Sure, Mr. Survey, we'll just take that offline.
Yeah, sure.
And the last question which we'll take up is from Mr. Dharmender Kumar. So he's adding a supplementary question to Mr. Ashok that if duty is paid by a CHA like DHL, then also BOE is not showing in GST or 2B. So Mr. Dharmender, your observation is right. So even these should form part of the reconciliation. With this, we come to an end of today's roundup, and thank you again.
Okay, thank you.